Right, the Kiwi then. We had a pretty tough time of it with respect to the setup. The analysis was correct. We got the move into 5650 that I was talking about in the prior videos. I'll put the links in the description. Day one, day two, and day three. And day three, we had day one and day two longs, and we had a correction into those longs, um, but only to make a double bottom. Um, so we were correcting. We weren't correcting. We were correcting into late trade day two longs, right, into Asia. Um, so whether this is setting up for the capitulation of the bulls is the question that is yet to be answered. As I mentioned before, if we cast mind's eyes back over to the week prior last, right? So commencing October 2nd, 3rd, we had day one, day two, day three, and then it wasn't until day four that we made fresh highs, and then all of that juice got sucked up here in the move into the end of the week. What we'll know is that we had a bit more of a delve into these longs on Wednesday. We had a much better move. Um, Now the hourly ATR has shrunk considerably since then, and on the daily RTR is somewhat lower as well. I mean, moving into that week, the ATR had been picking up, and we're actually seeing the ATR drop. Now we were left with an inside day on Wednesday, but we do have this W formation, and I'm a fan of these in that they're reversion patterns. And I think I spoke about this as well on prior videos. So we may see a move lower into the neckline before heading up or rolling over. And we would presume that if we can't extend on Thursday higher, that this is going to roll over and create a lower low. Very similar to what happened on this W formation. The really got a long extension, ran out of juice on the bid, and rolled over for a downside continuation. In any case, then, but we got some of the move that we were looking for. Commenced in Asia, rolled over into European session and lower. Now, for me, I'm looking for moves inside of the first 3 hours of the open for London and New York, predominantly New York. So would have been tricky in London, and we got a false move lower in New York. But given the M formation, let me just given the M formation, right, this steep candle moved right up into the neckline and beyond. And they are reversion patterns. So depending on what time frame, they seem to play out pretty well on the hourly and higher time frames. Not so great on, not so reliable on, say, the 15-minute chart, for instance. They tend to continue. They tend to be topping or bottoming patterns, but at least with the hourly or higher time frames, you can get actually some nice trades in from, say, the bottom here on a 1-minute chart to move up. You'd have to have your structure broken, etc. But the target would be high up in the length of the opposing trend of the M formation for a retest, similar to how people trade order blocks and so forth. Anyway, so with that on the radar, trying to short below the neckline makes life tricky because your stop loss needs to be higher up and your risk to reward gets all out of whack. Anyhow, moving down onto the 15-minute charts, we got, for instance, in London, we got a late move. It started in the window. You've got the M formation, topping pattern, break of structure, pin into the break, hammer, and off we go. For a scalp, or if you were up here looking in the 1-minute chart, there would have been structure in here for a, you might have said prior to the M formation that was high enough into Asian shorts, and on this engulfment, you'd be looking for signs on a 1-minute chart to short, given the 1, 2, 3 pushes into the peak formation or formations. So that would have been your entry in here. And then in New York, we were working the low as the day started off. So that could have been your cue to move up, but you don't want to trade against the peak formation. So that's up to those that want to pile on that type of risk. But given the M formation on the hourly chart we just talked about, there was an opportunity in there to target the neckline at least. Now, on the entry for the downside, at this point, rolling back on the equities open on Wall Street, which were starting off pretty negative, there's a sea of red in the in equities as a whole, bonds as well. So the yields were higher, the dollar was climbing up. So it was looking pretty nice for a continuation of Asia, London, and for a lower low to start off the day. So, but at what point? So at the end of this candle, there were opportunities to short. So there was the high of the day at the start of the day, the low of the day at the start of the day, and then the move up. And you were wondering if this was not the signal to go short, but there was no confirmation. And we got this move up, and then this may have been the high of the day, the M formation. I say, sorry, over here, no, there was no break of structure. So there was, anyway, so this continued higher, and we had the pin on the right-hand side of that M. We had the engulfment, 3 pushes lower, with the pin. And this was actually something I took, but unfortunately it wasn't to be. and the market was reversing at this point. So now this is where trading against the M formation that was on the hourly chart was proving problematic because we needed that correction into the neckline at least, and that's what was happening here. And it failed to break structure over here, and I had my stop above. I can't remember if it was above the highs or above the pin. But anyway, it was looking good for a while, but there was no momentum, and it was doing a lot of fooling around over here. Which gave me opportunities to look for a break even, because it just, at this point it should be taking off. If that's the high of the low, and if that was in the equities hours, and the traders had intention of taking this down, it would have gone down. So that was your cue. Looking at the clock, what price action do we have, and if it's not taking off, then it's time to get out. Anyway, so, and then this continued higher, taking me higher and higher, and eventually this gave the signs to short, but it came outside of where I really want to be positioned. Anything could happen outside of these equities hours. So, but anyway, we had the M formation at the top, or this micro one here, followed by the engulfment, breaking the structure, breaking more structure with another engulfment. We had the pins over here, and the follow through came eventually for that having been the ideal setup for the day, but just not in the timing window that we wanted to see it. But being at the top of the volume, sliding through low volumes for a nice So for the remaining days of the week, I think I forgot to pause the video there. Sorry if I was sat there in silence for a minute or two. The inside bar is a promising feature on this chart. I'd like to see a move up to come down. So we've got this sort of creeping trend here. So I'm in anticipation of a move up for a final test above here. And then the capitulation into the lows of the week and perhaps further. further down, but time will tell. So we'll be watching this like a hawk for an insight as to what may come of the next couple of days. So looking for peak formations and an explosive move down, or this could come down, continue trickling lower, potentially for the move up for a continuation higher, which would play into, if we look at the bonds at the moment, in fact, they're at extremes. Looking at the 10-year, for instance, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of uninterrupted higher highs and lows on a weekly. That's 10 weeks. Well, in that case, there could be more to come. Now let's look at the. But anyway, we're heading up into, well, we've headed into prior structure. So, I mean, just by eyeing that, it needs a correction. But that's not to say that it can't continue higher. If we pull up the fib, we're already at a minus 272 extension of that daily range. The correction, we've got that W formation that's played out, moved up, spiked into there. But I'd say no, there's still some gas in these yields. I mean, we've had the correction, and it hasn't been the steepest of climbs, has it, over this week, over this month? So there could be some fuel left in it, really. And we've not even made a 50% measured move of the range yet, which is where the minus 618 extension pretty much marries up with. So my bets are a little bit higher from here. So in summary, let's just keep an eye on this bird then. Inside day today being my Wednesday still, just moving into Asia now, coming up to Tokyo Thursday. We've already got some signs that this wants to head a little bit lower. It's struggling to move up on the daily. So we've got Asia putting in a low, testing the neckline of this W formation. Pretty feeble right hand side. But we do have the hourly pin to fall back on. So, I mean, the structure for me is the last higher low, which was over here. The London lows of Tuesday, which is so far held up. So, if we get a break of the structure, we'd hope for a move back in to the level 3 of the week for the capitulation down for later today and to finish it off on Friday. Okay, good luck out there.